Good morning, everyone. Thursday, March 12th, 2020. Ivan Barratt here. Most of you I know, but we're sending this out to all our current investors and prospective investors. We're getting a lot of questions right now about the coronavirus, its impact on the economy, and its potential impact on BAM as a company and our portfolio of assets that we own and manage. So I'm going to go through some things here. Don't know how long this is going to be yet. I'm just going to get through this. No editing, no fancy polishing, just getting this content out to you in a timely manner. So first and foremost, before we get into this as an investment outlook, on behalf of me and the entire team, thoughts and prayers going out to everyone out there, especially folks with compromised immune systems, elderly folks, anyone that's at real risk here. Thankfully, there's many of us out there that aren't really at risk. This is very similar to a bad flu. Hasn't killed any children, but it does have an impact out there for several different folks throughout the economy, primarily in that older age range. Now, taking my investor hat and putting it on, good news. So BAM as a company, quite strong. Of course, we're working to keep our employees safe, taking extra precautions at our sites, making sure that our employees feel safe, and we support them if they're not feeling well. They need to stay home. They need to take extra time off. Lots of schools are closing. And so we're being as supportive as we can. And the good news is, as a company, we're quite liquid. We have our own reserves on hand, and plenty of cash to, if needed, to support our employees and our company if things slow down here for a bit. On the current portfolio side, the portfolio has actually never been stronger. We're approaching 95% occupancy. Budgets over most of the portfolio are at or above, doing better than they should be. From a budget perspective, team's doing a great job. Sure, there's always some problems out there. That's why we're in this business. Solving problems is how we make profit and how we appreciate property. But all in all, the portfolio is performing very well. After all, we do support workforce housing, and those folks still need a roof over their head, whether or not they're going to work, or whether or not they're staying home. They still need a place to call home. I'd be a little more nervous if we were renting out $2,000 luxury apartments in some areas. I think those could see a little bit of softness, but all in all, the Midwest, still great low employment, high rental demand in the markets that we buy in. As always, as most of you know, we're focused on pretty solid demand markets, that in schools, diversified employment, good infrastructure, so on. So all in all, portfolios looking good. And down to the investment side of it, having a front row seat to 2008 and seeing that black swan forever changed my DNA. And it, for those of you who haven't heard this, I won't go on too long about this, but forever altered my DNA and how I put together my company. At the same time, one of my favorite books of all time by the gentleman that wrote Black Swan, Nassim Nicholas Taleb, the book Anti-Fragile here, benefiting from things that, benefiting in disorder, or things that gain from disorder, as he more eloquently put it on the front of his book. And that's what I saw and see today in multifamily, because we know a black swan is coming, right? Nobody can tell what it's going to be. Nobody can predict the future, but we know these things happen throughout history. It's the cyclicality of things. Winter always comes. It's not just a saying from Game of Thrones. It's the seasonality of the cycle. And so whether it's a financial crisis or a disease, these things happen. We don't know how they're going to happen. We don't know exactly when, but they always do. And so our goal is to build a company, an investment portfolio that will maintain or even do better in times of disorder, in times of correction, in times of chaos. It's something that's not correlated to your stock market, right? Today we're down, I think about 20% in the S&P since the high. 20%. I mean, we are in bear territory, and the apartments are doing great. Interest rates have crashed. So we're looking at every asset that we can possibly refinance because debt has gotten cheaper. So that leverage of that really good debt, which is only available to multifamily, not any other asset class in real estate, that debt makes the deal even better. We've got an off-market deal right now we're excited to announce. We bought it at a price and the interest rates were here and the interest rates have gone down. Since we put it under contract at a certain price, interest rates have gone down. And so that spread between where we underwrote the asset to where interest rates are today makes that return go that much higher. We've got another couple of assets we're seeing come across off market. Primarily, we're seeing more deal flow this early in the year than we usually do, and we're seeing some good opportunities. Brokers via sellers are coming straight to their top buyers, and transactions are occurring without competition as much. They're occurring without property tours. Instead, they're going to the big brokers out there and saying, hey, bring me your best one or two buyers that close on time, do what they say they're going to do, don't retrade, that sort of thing. And so for us, with our track record, not only with our investors, but with our brokers, we're at the top of those lists. So we're seeing some really, really great opportunities in our own backyard, so to speak. Do I think we're entering a recession now? I do. This Black Swan event has changed my opinion from not having 2 consecutive quarters of negative GDP, but I think this is a highly likelihood of producing the definition of recession, which is 2 negative quarters of GDP. Some very good news around that is it's going to shake out weaker operators. It's going to expose mediocrity and allow stronger operators, stronger firms to take advantage of some opportunities. Will this be blood in the streets? I had that question asked of me yesterday. Very good question. I don't think it will be blood in the streets simply because there are literally close to $1 trillion looking for a home right now, looking for safe haven, looking for yield, a return on that investment, and seeking that outside of the stock market. So this is only going to strengthen conviction in alternative assets, primarily venture capital, private equity, all different sorts of real estate. And then, of course, what we do, which is, in my opinion, some of the most conservative types of real estate, buying assets below replacement costs that have cash flow day one, where we can put long-term debt on them to hedge downside risk, treasuries, gold. Those are the things that are becoming more and more in demand. Lots of capital out there looking for a home. So I see that capital entering the market, certainly looking for deals, but it will prevent blood in the streets, because if there's dollars out there looking for a deal, those dollars enter here. Those prices can't really go down to the point of blood in the streets because there's just too many dollars that are willing to take, like for instance for us, a 15 and 18% 5-year or so IRR. So I don't see an incredibly deep discount. I think there's just going to be some really good opportunities. That being said, I think there is still some stock market pain to come, which is a good thing for an investor because there's going to be a big sale. You're going to be able to pick up some good stocks on the cheap. Things like airlines, hotels, tourism, all these things that are going to be affected by the economy are going to be affected in the short term. In the long term, we're going to bounce back, right? So you're going to see a pretty sharp swing, as you already have seen in the marketplace. But when this blows over, in the hopefully the near future, you're going to see a swing back. As we say in investments, that pendulum always swings back to the mean. So now it's gone below the mean in the stock market. It's going to swing back up. Some more good news out there as we see it. All the central banks of the world, the financial institutions, governments, a good result of 2008 is that there's so much more collaboration on the fiscal and monetary side of governments, and more importantly of central banks around the world. There's already tons of collaboration. They're liquefying markets, making sure to maintain, especially capital markets. So with those of us that have liquidity, well, we'll just talk about my portfolio. Again, this none of this is an investment advice. This is just what I'm doing for my family. Number one, the business, the operating company, we're always investing in BAM. My wife and I, my business partner, investment there gets us our greatest return. Investing in the people, the tools they have, and growing that beautiful machine that executes on our wealth strategy, yours and mine, which is buying value add real estate and executing our business plan. Second, of course, is the real estate itself, investing in those assets that aren't correlated to the market, that have cash flow, and also the ability to grow capital appreciation by being in the right market, but also by making improvements to management and also the physical units themselves, amenities, clubhouses, pools, that kind of thing to grow rents. Biggest part of my portfolio. And then, of course, to not only manage risk, but to be in a good position and to have extra cash on hand for both emergency and opportunity, is staying extremely liquid. So heavy in cash right now, both as a hedge on unforeseen consequences, both in our business and my own personal portfolio. Lots of cash. And then for those of you that don't know this, I own a lot of physical precious metals, both gold and silver, in vault storage as another insurance policy or hedge, if you will. Yes, I believe that those commodities will go up in the future over time, but it's more of just a hedge for me because myself, my partner, and then of course our family office group, we're all very liquid. We've all got a big balance sheet. As most of you know, we have to sign, even though it's bad boy carve-outs, we still have to sign personally on all our deals. Bankruptcy, running the deals improperly, hiding cash, committing crimes, that sort of thing is all trigger for coming after us personally, forgetting to write the check on the insurance, right? The lenders can come after me personally if I don't do that. So we've got a lot at stake, but we've also got a lot of dry powder should we need it. I haven't owned a stock since college when I sold it to go on spring break. I own 0 stocks. I own 0 bonds. I'm not a big paper asset guy. Fully invested in my company, BAM, fully invested in my real estate, and then other than that, lots and lots of liquidity. That's really us in a nutshell. I am, again, super excited about some of the deal flow we're getting right now and the pricing we're getting. It's only tamped down by my concern for the overall population out there, for folks that are compromised immunity systems, older folks. I do think it is a good idea for them to be abundantly cautious in what they do and where they go. Other than that, I think the U.S. economy underlying fundamentals are extremely strong. We are the best economy on the planet and will continue to be that for the foreseeable future. And, if I could cap this off, I'm talking to other entrepreneurs and manufacturing, industry, services, and most of them are extremely excited. a manufacturing buddy of mine is getting more business because these large companies want more of their global supply chain and their manufacturing reshored onto U.S., Canadian, Mexican territories, back to North America, so that these interruptions in the globe don't affect them as much. And I think that trend is going to continue, and that bodes very well for the U.S. It bodes very well for the Midwest and the rest of the country, as we see more and more of these supply chains reshoring back to the U.S., back to North America, Fortress North America. If you haven't heard that before, you've now heard it here first, and I'm sure you'll hear it again. We are very lucky on a long-term trajectory. Natural resources, water, food, energy, infrastructure has some work to improve and re-improve, but that's only a matter of time before you see significant infrastructure improvements in the U.S. I think we're very well positioned as an economy. And again, just my investor hat on, it's times like this that I actually get somewhat excited, because I get to show you how impervious our investment thesis is to these black swans, and how it actually can perform better when chaos and disorder show themselves, as they always do from time to time. Thank you for listening. I know I've been rambling on for a while, but I wanted to get out some content to all of my investors, all our stakeholders, as well as our growing list of prospective investors. Please don't hesitate to reach out. I'm happy to answer any questions I've missed, additional questions, probably via more video right now, just so everyone can share in those questions and answers. I do thank you for listening, being part of our family of investors, and I look forward to speaking with all of you again here soon. Happy Thursday.